Hey there, fellow traders. Welcome back to the channel. Today, we'll be breaking down key market movements and gearing up for the exciting week ahead. We'll be looking at pound sterling to Australian dollar, euro to US dollar, euro to New Zealand dollar, and New Zealand dollar to Canadian dollar to get a sense of what's coming up in the week ahead. But before we jump in, don't forget to hit that like button and smash the subscribe bell below. Let's get down to business and uncover the potential opportunities waiting for us in the forex market. Stay tuned. Let's kick things off by taking a closer look at pound sterling to Australian dollar. Starting with the daily time frame, initially, we observed a clear uptrend, characterized by valid breaks of structures. However, a significant shift occurred when price broke below a previous low, signaling a change in market character and indicating a trend reversal. The market then established a higher timeframe supply zone, which it retraced back to retest before sharply declining. From this perspective, it's evident that the market sentiment has turned bearish, suggesting we should be on the lookout for further selling opportunities. Transitioning to the 4-hour timeframe, we refine our analysis by adjusting our higher timeframe supply level to align with current price action. Within this internal structure, we can identify clear breaks of structures, indicating a previously bullish sentiment before price retested our higher timeframe supply zone. However, with the subsequent change in market character, this upward momentum has diminished, prompting us to seek additional selling opportunities. Zooming in further to the 1-hour timeframe for a clearer view, we observe a distinct supply zone where we anticipate the market to retrace before resuming its downward trajectory. Consequently, we can strategically place sell orders at this level, setting stop losses above the supply zone and targeting profits on the downside for optimal returns. This analysis guides our approach for the upcoming week on pound sterling to Australian dollar, as we remain vigilant for potential selling opportunities. Let's delve into the analysis of euro to US dollar. Beginning with the daily time frame, we observe a clear downtrend characterized by significant breaks of previous lows. We then identify this supply zone, where we anticipate the market to retrace back to this level before resuming its downward trajectory. With this perspective, it's evident that a short-term upward movement towards our supply zone is likely to occur, followed by a further decline. Transitioning to the 4-hour timeframe, as we anticipate buying opportunities, we must await any change in character within the recent price action. However, there's not much to see from this time frame, so we have to switch to a much lower time frame for a much clearer view. Zooming into the 1-hour timeframe, we witness a notable change in character, signaling a potential start to the awaited upward trend. Price establishes a clear demand zone, offering us a prime entry point. But now that the market has already moved away from our entry point, entering at this current price will subject you to massive risk of capital loss. Instead, we can await a break of the swing high, potentially leaving behind a demand zone which it can come back to retest, giving us a chance to enter on our long positions. Alternatively, the market might also retrace back to the extreme demand zone, which would provide us with even greater assurance of a successful trade. In summary, for the upcoming week on euro to US dollar, we watch for the potential development of a new upward trend, focusing on opportunities presented by price action around demand zones. Now, let's analyze the euro to New Zealand dollar pair. On the daily chart, we observe a bullish sentiment in the current price action, characterized by clear breaks of structures and new highs. At first glance, one might assume we should be looking for buying opportunities. However, it's essential to consider the overall market sentiment. Looking to the left, we notice a clear break of structure, indicating that the overall market sentiment is bearish. Additionally, price has printed a supply zone where the market could retest before potentially reversing. From this higher timeframe perspective, it becomes evident that the current bullish sentiment is likely just an internal pullback of the overall bearish sentiment. Therefore, we expect the market to push up to retest the supply zone before dropping. Transitioning into the 4-hour timeframe, we observe that price has partially broken above a high. However, for a clear break of structure, we must wait for the market to break and close above the previous high. From here, two scenarios could unfold. Firstly, price could push up and retest our higher timeframe supply zone, providing us with an opportunity to enter sell orders at this level. Alternatively, the market could break above and retrace to retest a demand zone with liquidity resting above it. In this case, we could place buy orders with targets set on our higher timeframe supply. After retesting, price will then drop, giving us the opportunity to enter sell orders at this price level. It's crucial to remember that since the overall market sentiment is bullish, placing sell orders prematurely could be risky. Instead, we wait for the market to give us a change in character, indicating that the bullish momentum is depleted before considering sell orders. So, what should we expect on Euro to New Zealand dollar in the upcoming week? Keep an eye on potential retests of these supply and demand zones and be prepared to capitalize on market movements as they unfold. Now, let's delve into the New Zealand dollar to Canadian dollar pair. Starting from the 4-hour chart, we initially observed a downtrend until price broke above a previous high, signaling a potential trend reversal. Price has printed a clear demand zone, indicating a potential opportunity for buying. From this higher timeframe perspective, it is clear that the market will be pushing to the upside, meaning that we will be looking for buying opportunities. Transitioning into the hourly timeframe, however, we notice a strong bearish sentiment in the current price action characterized by clear break of structures. This suggests that seeking buying opportunities at this moment may not be advisable, as it would mean going against the strong selling momentum. To gain further clarity, we delve into a much lower timeframe to observe how price reacts at this demand level. While some traders may prefer to execute their buy orders at this strong demand level, a safer entry strategy involves waiting for the market to take out this minor swing high, indicating a weakening bearish momentum. We then identify a lower timeframe demand zone where we'll wait for the market to retest before placing our buy orders. This entry model boasts a high success rate, but it's essential to note that waiting for further confirmation on the lower timeframe may result in missing out on the trade altogether. It's crucial to know when to employ this strategy effectively. And that wraps up our Sunday market breakdown, fellow traders. I hope you've gained valuable insights into our approach to analyzing the market as we head into a new week. If you found this video insightful, please leave a comment below, and don't forget to like and subscribe for more insightful content. Here's to a profitable week of trading ahead.